It's Sunday, the 15th of October 2017. I thought it was a good chance to do a gold price update given there's been a bit of action in the market this week, and it came off nicely off the lows from last week's US job numbers that were, I think, probably a little bit below expectations, but there was kind of some thoughts that maybe they weren't as bad because of hurricanes and stuff, but it was a bit of an unknown anyway. But the market's reacted positively. The gold market up $40 this week. I'd hoped that it was probably looking for a bounce around those levels. In these videos, I've often shown these repeating ranges in the gold market tend to work quite well. And in particular, I was looking at this one, the last move down, as sort of the template for what that move there was going to be. And that 1260 also was kind of a key level earlier in the year. I remember there being a lot of resistance there previously, so it's a good level to hold that. Now, where it goes from here, I mean, you can still sort of look at the move we had last year. We kind of had a repeat here in July and September, so it's had that move, pulled back. Now, where's the next move going to come? Maybe it sort of goes back up to test this 1360 sort of range, but that would be the first sort of logical level, and that's obviously going to correspond to sort of these uptrends here are similar. We saw one here, a little bit less there, but again, so I'm thinking it heads back up toward that, test the 52-week high at 1350, or I guess it's the yearly high anyway. So that's where I'm looking at the moment. Obviously, the stocks haven't done a lot, but I'll get to that in a minute. The dollar index is an interesting chart as well. I've kind of been using that as my a bit of a template for the gold market, how gold price is going to move, because it's really been a dollar story, and how the dollar's declined this year, the US dollar. Obviously, we were talking about it up here at the 100 levels, looking for that head and shoulders top that really broke down nicely, and everyone was caught off guard. If you remember at the start of the year, the US dollar index, everyone was bullish on the US dollar. If you looked at any of the sort of macro analysts out there, they're all bullish on the US dollar. I mean, that's just a lesson that these people are often, when everyone's universally bullish, they're almost always wrong. And at the lows, again, it was everyone was universally bearish on the US dollar. But my thesis has been that we were going to see, after a decline of this magnitude, you were likely to see a bit of sideways action before any resumption in this decline. And I previously talked about the last interest rate hiking cycle is actually my template, last US interest rate hiking cycle. So that's the last interest rate hike in the period from 2004 to 2006 occurred at the end of this orange box. Now it's kind of, I using this because I kind of think it's where we are now, and it's a good mesh of the fundamentals in the chart. So we had this trend upward here as interest rates were moving up, and that's similar to what we had, and that broke down quite strongly in 2006, and then you had that sideways movement. Now I'm thinking we're kind of in this same sort of phase at the moment. That period was, well, it's 4 or 5 months that it went sideways there, and I'm thinking we're kind of due for something similar. And I'm thinking after that's finished, it starts to go lower again, but it takes a while for the market to reset, and all those people who have been short the US dollar to sort of get out of that, and then I guess for enough ammunition to start building up again for it to go lower. Now this 94 level seems like a key. That's kind of, the alternative scenarios, I can see a bit of a head and shoulders bottom potentially forming here. The 94 level would be the neckline. If it can come back and test, if it comes back to this 92 sort of 20 level there and forms a bit of a shoulder, you could potentially see it come there and try to break out again at this 94. But I don't see a lot of catalyst for that to happen at the moment, and I still think that it's going to come under pressure again, but it might take a few months yet. But that's kind of sort of still in play, and I think just one to hold off there. But I think in general the gold market's probably going to be relatively positive if it can't break out of that 94 sort of level. Australian dollar has been sort of an interesting trade the last week or so. Obviously, we've had some terrible data on Monday, I think it was, or last week. It was the Australian retail sales numbers were some of the worst in 3 or 4, maybe 5 years, and the Australian dollar sort of shrugs this off and pretty much just trades as an inverse to the US dollar. And my thinking for a long time has been that eventually the Australian dollar will start to trade on its own fundamentals and not just being an inverse to other currencies, or particularly the US dollar. And obviously it didn't do that again. It's surged up again back towards sort of 79. But I'm thinking this 70 sort of 7 level here was a good test of this almost 18 months sort of range when I went through there, and now it's retested this level. But I still think that the fundamental pressure on this on the Australian currency is likely to come in, and that's why I've been quite bullish on Australian dollar gold stocks in the sort of medium longer term. I think that trade's still going to be the one to be in. That's obviously had an effect on the Australian dollar gold price as well. It's a bit sideways at the moment. It's actually right on the level that I look at as sort of the bullish sort of pivot line, I guess. Once it gets above 1650, that seems to be a bit of a mini sort of resistance level in here, and 1650 tends to be where the market starts to get a bit more bullish. Just something I've noticed. Obviously, it's come off the bottom of this range, but still sort of nearer the bottom end than the top. But my long-term forecast has been sort of up toward the top of this range again in the next 12 to 18 months, and I think that still looks like it's in play. It's held this range and is consolidating now, and I think I'm looking for another move higher here. S&P 500 has, again, near all-time highs. Well, he's at an all-time high, I think, or maybe it closed a little bit lower on Friday, but kind of unstoppable at the moment. But I mean, you're not seeing huge gains here. It's eking out these every morning when I wake up and look at the how the index has performed overnight. The Dow is very rarely more than sort of 50 points up, which is not more than a 0.25% these days. And the same for the S&P 500. It's only making these sort of 0.25% at a time, but very rarely has a down day. Like one every 10 or so seems to be a down day, but it's not making massive headway here. But I think this is a very sort of overbought looking chart at the moment. There's a lot of complacency in the market. You can see here it's looking pretty overbought on the daily chart. That doesn't necessarily mean that it can't keep. I mean, it can still be overbought and still go up further. The weekly chart, it's also overbought on a weekly chart. I was just doing looking at a few levels here, if there's any signs of this stopping, and there's not really, but when something's overbought on a weekly chart is generally signs near the top of a market, particularly if you start seeing this sort of series of tops in the overbought indicator, RSI. I think I've said before in these videos that I really use the S&P 500 as a gauge of where the gold market might be heading, rather than directly trading it or even trading any US stocks. But generally, if the S&P 500 is at a higher level and it's due for a downturn, gold will usually do pretty well if the S&P 500 comes off sharply. It's probably the sort of number one thing that drives the market, I guess. Traditionally, that money coming out of the market and going into gold as a safe haven. And I've seen a few, I think I've brought this up before, but this is something I've just got off Twitter. This guy's got a few good charts actually. You can look him up. But this streak since Trump basically was elected is now the second longest streak ever of in the S&P 500 without a 3% decline. And by the end of next week, it'll be the number that be the longest if a 3% decline doesn't happen. So pretty likely it gets to that, I would say. But you're kind of dealing with a market here that is very overdue for a pullback. And when you see something, it's in 90 years of history, and this is one of the longest runs ever, almost the longest. And the first one was a long way ahead of the others until recently. I mean, and that was sort of at the beginning of the dot-com bubble, I guess, 95, 96. But this is something to be very wary of, I think. And given gold is actually, I'm happy the way gold's performed given the strength of the US market, and I think when this market comes off, when the S&P 500 comes off, that'll be another thing that drives the gold price, and from driving it from quite a good base that it's had in the last 6 months, despite the S&P 500. Some of the other charts that I follow, stuff like the GDX and GDXJ, have really been pretty dormant for the last few months. Again, there just doesn't seem much interest in the gold miners at the moment. I've drawn a couple of lines on here, and this is a thing I'd show on the previous charts. I've drawn this horizontal line here just to show that it came back and tested the breakout level at about 2280 there. But you can see here just the gradual decline in volume, and it's really a dormant market in 2017. These larger gold miners, and the GDXJ is, or maybe not just the GDXJ, but the individual stocks that I follow, particularly sort of the developing miners on the ASX, non-producers, but someone with an exploration asset that's got some real ounces in the ground, they're not doing much at all, and there's just no interest whatsoever. How that plays out, I don't know, but it's still forming a decent base here. It's a nice little uptrend, but there's no interest in this market, and that's probably a good thing, to be honest. When it starts to run, it'll run hard like it does normally. But stocks like Ramelius or Silver Lake are just doing nothing. They're not having moves more than sort of 3 or 4% before they go back and sort of sit at their lowish levels where they've been most of the year. So, I mean, you just got to sit there and bear it. If you've bought stock that is you think is well valued, is well priced at the current price for a purchase, and just sit with it, because I think most of those companies they're still churning out relatively good cash flow, and they're set for a while yet. So yeah, I still think a lot of those companies are good buyers, but there's just no broader market interest. I'm not sure what the reasoning is there, but yeah, so that's where a lot of the gold related indexes are, and what I'm following at the moment. I think it looks pretty constructive in the gold market at the moment. It's broken out above this sort of long-term downtrend, had some nice consolidation here, come back and pull back again, and it looks like it wants to go higher and back up and test these sort of 1350 levels again, which is the highs last year as well. If it breaks out above 1350, then there's a bit of clear air, sort of probably getting toward that 1500 region. That's sort of the maybe in a 12-month sort of time frame, that would be a logical sort of target if it can get out about the 1350. So that's what I'm looking at the moment. Pretty good time in the market, but in the gold market itself, but not necessarily the stocks. But I think they'll eventually start to follow.